Good morning, everyone. Sorry for the delayed start there. Thanks for your patience figuring out some doctor's appointments today. So, yay! Not for me, just kids' checkups and all that stuff. Don't worry about me. So, anyway, I think we're all good to go. All right. Good morning. Good morning. Mic check. Mic check. Screen check. Looks like everything's working correctly here. Good. 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 Welcome, welcome, welcome. Hopefully everyone has been able to rest up and all that fun stuff. Good morning, SSFTG family. Morning. Hey, Zach, how's it going? Everybody else so far, welcome, welcome. Let everyone have some time to get logged in here. I hope you all had a chance to rest up again, get ready for the day ahead. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. Very important to understand everything that is inside there. Also, just a quick note for you all before we jump on in today, if you're watching on the YouTube side of things, the stream does have between a 5 and 30-second delay, depending on where you're logging in from, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning, good morning. I'm gonna get my caffeine. I'm running behind. I'm actually not behind. You know those mornings? Total side note. You know those mornings where you feel like you're behind, but you're not? Like you were off on something by like just a couple minutes and it just feels like the whole day is just twisted just a bit. It's really weird how that works. Anyway. Just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you do have a few different options to check out if you're looking to further your trading education and career. One of the easiest ways to jump in the family is right here on YouTube. You can check out the join button below the stream, which gets you access to the extended hours room, where we continue on from the morning room with a little bit less delay to the end of the session. YouTube members also have access to the community area where I post all kinds of different chart setups, stock charts, analytics, and more. Of course, every member gains access to our Discord chat server and to get the awesome badge next to your name here on YouTube to show your support. Plus, it just looks cool. And the best part is, it's $5 a month. You skip a coffee at Starbucks and you're basically set. Pretty straightforward. If you want to take a massive step further forward, though, in understanding our trading approach and what it is that we're doing here every day in the room, look no further than the Day Trading Academy. This is where you can learn how we do everything. But listen, this isn't a small PDF guide that you're going to finish in an afternoon, all right? Yeah, we do have a quick start course, but to really dig into the Academy and really dig into the meat and potatoes, if you will, like the Academy does, you're looking at about 19 plus hours of video course material. Along with that, you have homework, study guides along the way to really make sure that you're understanding what's going on while you navigate the course, which I review personally, and you also get the DTA upgrade discount, which is pretty cool too. Then there's the top floor, the executive suite. That's where you'll find the VIPs. VIPs have permanent access to all that is SSFTG, the Day Trading Academy, private Discord chat, future updates, new trading strategies, monthly webinars. We got one coming up this weekend, one-on-one access, and everything else. It all comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream for the entire session on Zoom, meaning that they are on the fastest connection that you can get without any delays from start to finish. So whether you're here for the very first time or you're one of the VIP vets over on the dedicated Zoom stream, welcome. I'm glad to have you trading alongside with me today, analyzing these crazy markets of ours. Let's take a look at some news. Let's take a look at some charts, see what's going on today as far as that is all concerned. Yeah, for VIP members, there is a Zoom stream that there's a direct login link. So all you have to do is click it in the morning, you do the password, whatever, and then you're ready to rock and roll. That's a separate stream that runs for the entire session, dedicated again for VIPs. So yeah, there is one. Yep. Get that out of the way. Don't forget to grab your morning DP levels. We've got all of those posted for you for the major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. We've got Wednesday upon us. Crude Oil Inventories, 10:30. At 10:30, we've got the forecasted inventories at a negative 4.466 million. I mean, here's the thing, right? Like, if you look at the API numbers yesterday, they came out at a build of 0.8. So this forecast that we've got going on here of a negative 4.4, that just doesn't line up. It doesn't make any sense. Unless there's a really big surprise number that throws people off, it's not likely going to be the case. So I'm anticipating more of a bearish number today, which certainly doesn't help crude. It's been having some difficulties, but a little bit of a bounce off the lows there. You know, that's kind of what we're walking into right now, where we've got these inventories kind of hanging out at 1030. The API number yesterday is telling us something totally different. What we're going to have to really decide on is, what is price action telling us, with the underlying that there's a potential for a bearish move, right? There's a little bit more bear heat to it, if you will. So we'll get to that when we get to crude, but let's take a look at the S&P first. Starting off in the S&P, we've got ourselves the V bottom all the way down. Now, as far as the pullback is concerned, when we zoom out a little bit further to the 60-minute chart, we're going to have to add a few more days of data here. Let's go back to 90 should be all right. Yeah, there we go. If we look at the larger pullbacks that have taken place on the S&P, right, the little pullback 2.94, we've got another pullback right here 3.12. Those are the typical larger ones, and on the S&P, the smaller ones, we've got 1.76. Get that out of the way there. We've got, there's another one right there. Well, I measured that one off. Jeez, measure over here. Got a 1.49. So we can see the average pullback distance of the large pullbacks and the small pullbacks typically. And when the market really wants to drop further than that, then you're looking to typically double that up, right? So if we've got the average top at 1.76 and we look at the move over here and we say, all right, 1.76 is the normal amount that it should fall. That was right here. Okay. Well, if it's going to drop further than 1.76, then we're probably going for the larger pullback, which is around 3.12 to 2.94. Just say 3%, cut it in the middle. And if we look at where the market started finding supportive bouncing pressure, we found that at around a double value pullback. They did slide through it a little bit, right? And this is why it's important to not necessarily have to be the first one to the party, because you'll notice what happened after the bulls confirmed that they were interested. Beautiful micro double bottom off of that and a continuation back. You don't have to be the first one to the party every time. It's not necessary. You usually take on more risk if you do, but sometimes you nail the really good entries. It's a give and a take. We had a nice 3% or so pullback. I guess if we put the 3.12, we can see that, I mean, it was floating around that area either way. The actual pullback in and of itself ended up being from top to bottom 3.64, a little bit wider. But all things considered, we've got a double value pullback, and the S&P is starting to continue back up with a V bottom. If that's going to be the case, then we really need to see some things, right? Let's look at the volume and see what's going on from this perspective. There we go. So the POC is up at the top. That's a bit of a bummer as far as the bulls are concerned, but with a V bottom, you can't really expect them to put a POC at the bottom. They just didn't spend that much time there. Like, how are they supposed to ever get a POC down there when they only spend 2 or 3 candles there? You know, it's a very difficult feat to do. It would require a massive amount of volume, which is basically unveiling what they're trying to do underneath the scenes, and they're not about to do that, right? Let's be real. So they just haven't had a chance to shift the POC. You can see some very, very strong pulses in volume inside of this move. And on the NASDAQ, there was a really interesting one that I want to talk about as well. But there was a lot of really kind of back and forth movement. And this seemed like they dove down and they achieved an objective. Now, we know that they got the double down objective. But we can also look backward a little bit and say, what other objectives might there be? If we were going from the low all the way up to the top, to the impulse. And before this thing starts loading, let me put it on minute. What could they be reaching back for? I have no idea what they could be reaching back for. No clue. None whatsoever. It seems like they were reaching back for a break-even test or maybe a reload. If buyers wanted to dive in and really hammer this gas pedal and load up and fill the coffers, if you will, what better spot than a big old rifle to the downside, retest break even, V bottom back out of there? How many times do we see that? We see that over and over and over again. It's constant. And the fact that they missed it actually demonstrates even more strength. So if the bulls really start ramping up, the S&P, I mean, this thing could be gearing up for a monster of a rally. But if the bulls fail, and this is going to be the big caveat because we haven't seen the confirmed V-bottom yet, they have to break above this high. That proves the V-bottom. That hasn't happened yet. But in terms of a failure, if the bulls fail and this ends up rotating back down, a perfectly logical point of interest would be an aggressive dive down, which is usually the case at the open anyway, right back to get a physical test of the POC at the bottom of a 3-press wedge. I mean, like, it's ridiculous. And the 618 on top of that too. Yeah, I mean, it's almost perfect to the downside. And that's the thing, like when sellers are doing the same thing that buyers are doing, buying, right? Sellers exiting and buyers jumping back in. It's kind of the response that you expect. Granted, in a perfect world, we would have gotten the physical test, and maybe that's yet to come. But, I mean, geez, as far as reaching down for an objective, that's nuts. Zooming into a little bit closer of a 15-minute perspective, we can see this is a really nice breakaway move. And if we have the bottom to the top for a 5-wave pulse, this is longer, and it went about 1.38, 1.35, give or take a little bit. Get a little bit of a pullback and a continuation up. Now, if we look at this from a realistic cycle, does this make sense? No. If you've been hanging out for a little while, you know that when wave 2 is nice and clean, wave 4 is usually a train wreck. This has been pretty clean and clear and under control, right? And I figured that out yesterday. It was under control. So this is more likely still part of wave 3. They're still likely working on wave 3. If they're trying to get this to go to the upside, this is more likely in the end going to look like this, where we have a slightly wider, more gross wave 4 like expected, and then a finalized move up. That fits the bill. We'll see. Over on gold, jeez, right back into the range, huh? It left home and it didn't want to be away from home. Came right back in. If we're looking at the overall volume from the bottom to the top, first the impulse, and please, actually, I'll load it up pretty quick. Huh? If we go back and we look at what was going on here, from an impulse perspective, we have the originating POC, which was at 1806.1. Now that's from the bottom to the top, how the market responded to this overall move. Now, it's pretty obvious why the POC was there. The market spent a century and a half floating around that area. Obviously, the POC is going to be somewhere inside of there. But when the market broke back above that, that was the attempted confirmation where the bulls are saying, hey, do we want to try to get this thing going? Is this a new leg up? So we can continue this POC a little bit further forward, a little further forward, and the market's coming back and starting to trigger into the 6.1s. It dives underneath the 6.1s, and you can see the sellers gave it a shot. Buyers may have even exited a little bit ahead of a potential dive lower. There's a very real expectation for sellers when they broke back underneath that to dive back down. Really big way. And they might still be working on that, right? I mean, that might still be the case. We haven't moved it forward yet. But that would be the anticipation for the sellers here. It immediately failed, and we can see they got out of break even. So if the shorts were trying to take it to the downside, they were given an exit. And if longs were taking it to the upside, they re-upped on this pullback. So we continue this drawing forward, and we keep going a little bit further forward. The POC stays the same. The market comes back and retests break even again. Now, from the bulls' perspective, because we know the shorts have already exited. If the shorts didn't exit on that move, then they very likely exited on the secondary test over here, because that's kind of like a Hail Mary. Like, oh man, finally. This might dive through, but as soon as it stalled out, everybody knew what was going on. They're like, nah, wait a minute, something's up. But things started changing a little bit. It didn't end up V-bottoming out of there like a lot of buyers wanted. And with that failure to launch, it started kind of rusting a bit. It started showing some kinks in the armor. We churn back and notice what happened, right? We've got the POC, which is right here, right inside there. It hasn't changed. Nothing's changing. We continue this a little bit further forward. Nothing's changing. The bulls back up. And then we have this little bit of a launching pad, which you can see, that potential re-up, retest breakdown. This is still a developing POC from the short side, but this is incredibly strong for the sellers if they can start breaking down through this previous structure. This is what's holding them up right now. Right? The market's saying, hey, look, listen, this wall is thick down here. You're going to have to prove it. So they're going to need a spike down, something like that. But don't be surprised to see it come right back up and drive down again, or at least somewhere close. I think there's a lot of work that has to be done here on gold yet. I don't think this is the end of the fight by any means. If we look at the volume from the bulls perspective going to the end, first we have the impulse. The data's broken. Great. All right. I can't look at the impulse. Let's just go to the end. At the moment, the market's currently underneath that POC, and if those are bulls, they're stuck. If they're shorts, they're in the profit at least. I don't know if they've hit their objectives yet. Yeah, they got their 0.5 to 1. The next would be a 2 to 1, which is quite a bit further down. Now, here's the nice thing. If they get their 2 to 1, that'd be great for the shorts to re-up on another move. So, I mean, there's a lot that still needs to happen, but it's getting interesting. Over on crude oil, again, with the underlying anticipation of having bearish numbers. What do we have going on here? Well, obviously, we've got a pretty long-term perpetual drive that's been going on for a bit. But if we look at the grand scheme of things, the top really wasn't that long ago. That was back on the 6th. So from this drive to the downside, if we're looking at this move lower, how did it really sort of form? Initially, we had this drive down. Maybe this was wave 1. Nope, it can't work because this came back a little bit further up. They could be building a significantly wider drive to the downside. So if that's the case, they've gone about 1.58, usually like 1.61, but that's close enough, you know, nitpicking. Here's where things get a little bit interesting, because this is something that we don't typically get to look at. It's the shoe on the other foot. Wave 2 was terrible, right? It was awful. It took forever to form, which means wave 4 is likely going to be quick and decisive. That's a great sign for shorts to try to pump this to the downside. But before that can happen, this POC down here has to get out of the way. So this does look like it might be widening out for a third wave down, but it can't break above the $70 mark or it invalidates it. More like 70.15. So as long as we stay down here, let's say as an example, they turn around, you know, right around here, around the 69 mark. Just for memes and all that fun stuff. We get another turn back to the downside. We'll likely see some bouncing around the 6680s, and that's going to be the determining factor. But if we start churning back down, it's likely that 5th wave completion. And it's not likely going to hang around very long. You're probably going to see a pretty aggressive dive down. Bulls try showing up, quick little pulse, drop. Because wave 2 was slow and gross. Now, it's a guideline. It's not a rule. We know how markets operate around rules. They don't. But it is something to consider that this next drive to the downside could be very aggressive. And with bearish news pending right around the corner, I think we might have our catalyst if the market's still rising at that point. Something to consider. Other zones of interest, previous VVPs, we also right at the previous swing low, likely a stop run point, right back at the $70 mark. The problem is if they start breaking much above that, it invalidates the entire reason why shorts would want to go short. So if they go up that far, then they've got problems. Over on the euro, which we're still zoomed out to a 60-minute chart because this thing is still seemingly feeling like a waste of time. I'm really tempted to switch to another market. We've still got this wedge on the 60-minute chart. From here, it's not really doing much. If we go into the 15-minute and look a little bit closer, we've got some nice back and forth sideways kind of just grindy descending wedge action going on. They are beginning to try to break, but we haven't had too much proof. What would be really nice for the bulls is to get a decisive move up, maybe even another trap inside low, not breaking the other low, and then going back up and triggering above these highs. That would demonstrate that they've got enough power to potentially at least short-term trend shift back to the upside. And maybe that follows through with more, you know, maybe a daily hops on that. But for now, this thing's just, I can't do anything with this. If we zoom back to the 60-minute chart and we look at the overall volume structure from top to bottom, and catch this before it loads, please. There we go. POC is still up at the top. No change. So, is what it is, I guess. Just gotta have to keep waiting. Bitcoin catching a nice rally back up, like we were talking about in the Discord room. We're going to see a lot of buy the dip, BTFD, HODL, blah, 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 blah today. To be 100% totally transparent and honest, outside of the DCA dollar cost averaging in buying small size, I don't believe this rally up at all. I think this rally up is a final pulse, a final desperation grab for stuck longs to exit at around 32,850. That doesn't mean that it doesn't have another $1,000 of upside, right? But if we start showing resistance around the 32,500s, 33,000s, we've got some issues, like big issues, where this could be that desperation grab and a massive dive back down. And you know what I'm looking for. We're looking for 20,000, potentially down to 12. Now, let's put the shoe on the other foot. We do break higher. We start getting above 33, 34, 35. I'm not really going to get interested on Bitcoin until we at least see 37s, and preferably even up to the 40s to really prove that the bulls have a shot here. I'm not going to be buying at the 40s. I'd be waiting for the pullback after that. But this buy the dip, you can see, at least the way that I'm approaching it, I don't believe it at all. I need a lot more proof. And I just don't see this dip underneath 30,000, aside from the fact that it looks like it might have been a twin reversal on a wider time frame. That's all it demonstrates. It just doesn't prove enough to me, especially when you consider the fact going out to the larger time frames. Let me get TradingView over here. When you look at TradingView, this is one of the major reasons why. They have not shifted the volume to the upside, and this previous POC is still hanging out. The only saving grace that the bulls have is that they haven't broken the lows. That's it. If we start getting down to the 27s, 26s, it's game over. There's just nothing else to hold the market up at that point. And again, looking back historically, where we are from a pullback perspective, from the top to the bottom, it's pulled back. Where's my measuring thing? From the top to the bottom, it's pulled 55.69%. Now, I'm not saying this can't be the bottom, but historically speaking, the market's never corrected down on Bitcoin to 55% and reversed. That's not what it does. Its major corrections happen at 70 to 80% or 25 to 35%, maybe sometimes 40 if it really wants to push. This doesn't fit either of those. This is that kind of gray in between. And usually there's going to be some false something or other, and then a catalyst, bottom drops out, and it rips everyone's face off. I mean, I'm just saying, now if we start seeing price action back above the POC and things start changing from the perspective case, then I'm definitely on board. But as it stands right now, I just can't be interested in this. Ethereum, nice dip underneath 2,000. It's got similar problems as far as Ethereum is concerned. Now, if you're looking at the volume on Ethereum from top to bottom, the thing that Ethereum's got that is just a touch different is, well, actually nothing. It's the exact same situation. It's just a little bit further up. There are a few differences, though, that stand out here that Bitcoin did not have, like large volume nodes that could potentially change the POC. They still have some work to do, but you'll notice the market is sitting directly on top of it. I still think Ethereum has a lot more potential to the upside to bring to the table than something like Bitcoin. Long-term potential, I think, is just higher on Ethereum. But they both have the same problem. The POC is just smack in their way. So we'll see what they're able to do. From the daily perspective on the NASDAQ, we got the 3.6% pullback, a little bit larger than previous, but nice little value dip. The 60-minute chart, we're still underneath the POC, which is back at 14,773.75. That's been the top up here. So this could just be a really wide corrective phase, which you could see. I mean, we've got the nice 5 legs to the upside, a nice little ABCD corrective phase back, which is now turning into a complex 5-wave pullback. Either way, we're potentially at the lows where the bulls may want to take over. I just wish we weren't underneath that 60-minute POC. Stock exchange is open. S&P is opening with a slight gap up, but it is not an outside gap up. It is an inside gap up at the top of yesterday. That's a bit of a a bit of a struggle there for them. Would have been nice to see them outside break up, but if they have a strong enough bull bar to pierce the top, they might still be able to carry through. I still think bulls have a shot. Looking at the current movement on the NASDAQ, the market's attempting to break back above the 14,700s as far as the major POC. But if we look at this overall structure, all things considered, we have a confirmed POC, which is down here at the 700s. That's what's attempting to hold right now. If the market demonstrates a successful hold, then we've got a reason to believe them in another continuation down to finish the drive. But if they can't get this job done, then, you know, realistically, there's a reason to believe that the bulls have that reversal attempt. Bears trying to tap underneath it. We've got a bit of a slugfest going on. POC, which is a developing POC, resting at 701. Whoa. If shorts are trying to take that morning move, that's going to make them feel a bit shaky about it. Nice continuation back up. The way that volume is developing here is beginning to look quite a bit more like wave one of a larger 5-wave impulse to the upside. This is creating a lot of bullish strength. These 701 buyers, it's still developing, of course, but we know that the previous POC was at 700. It's a bit of a chop fest inside there, but now we've got some decisions being made. Really quick flash to the downside. I'm going to utilize this as a flush where I think a lot of the earlier traders who were in, never mind, that dove down fast. I'm going to jump ship on that and just take it at around break even. That did not, that flew underneath that 701. We're now retesting it as resistance, and I'm going to have to give it a little more time. I tried catching it on what I was assuming to be a washout back for break evens at 701, but then it dove underneath it really aggressively. I want to see the bulls re-up off of the 701s here. Nice pressure. No fill. There we go. Nice little pop back. Good spot for a continuation on the bulls to attempt the rally to the upside. There we go. Beautiful drive back to the upside. Very nice. It'll compensate for that small little loss earlier. Nice drive back up. Again, this is the difficulty when you're messing around with developing POCs. They're developing. They'll jump around on you a little bit. So you got to be careful. Know when you're wrong and jump ship. Now, in hindsight, could I have held on to that and turned that into a winning trade? Yeah, I could have. But also in hindsight, how many times have we seen one of those dump and get blasted to the downside, and all of a sudden I'm having to build into a trade for the majority of the morning? I just don't want to deal with that straight out of the gate, you know? Nice continuation pulse to the upside, staying above the 701s. Also, we have that previous POC at the 700s, which was a nice dive back. They just went a little too far underneath it first time around. Nice pop back up, though. Next objective's obviously going to be filling settlement. Not too far away. If we look at the first 5 so far, that POC's at 705. Got 20 seconds or so left. Doubt it'll change much, but you never know. Looking over on crude, we're not seeing anything really shift yet. I'm going to zoom into a 1-minute chart and have a bit more of a focus on crude because I love this spot. 1 second. Be right back. All right, we're back. Nice continuation to the upside. Very nice drive. See if they can keep the train going or not. As far as wider upside objectives, obviously I took the shorter term objectives with the 2-to-1. It's a little ahead of it, but the wider objective, my average wasn't the same price either. If we go a little bit further out, they still have targets that are, up in the 767s. I don't think that's a realistic objective, though. As far as optimized entries, I think it makes more sense that they probably bought into this dip, and that might be why that dip occurred in the first place. Was to shake people out, myself included. I got whipped out of that thing too. Just to get them down into a point where they can buy where the 2-to-1s are inside the highs. Like if we put this down on the close of that candle, assuming that there was just a massive order here and someone sold, just a ton of contracts to dive the market down to fill their limit, then where are we, right? We're at the 2-to-1. Now, normally that would be relatively, who cares? Like, okay, great, a 2-to-1, but we're finding response here. So putting this into context, this dive down makes perfect sense. This was a manipulated dive down to fill a massive order, either for shorts to get out or longs to get in, but we're hitting targets. It's ridiculous, but welcome to the markets, Upside objectives from the POC, if they had a slightly worse average, though, would be above the top. I just don't necessarily believe that to be the case, given everything that we just kind of uncovered there. This looks more like we've got the first wave trying to get the second portion. As far as the S&P is concerned, very nice bull bar. That's what they needed. They needed that really strong bull bar to be closing above the previous highs. 43.28 quarter is the POC on the first 5. If we continue that further forward, with the assumption that the bulls are buying 43.28 quarter and they are long, then realistically we haven't seen them exit because we haven't seen the POC pop up. But it's not going to take much, right? I mean, there and maybe even there creeping up a little bit are fairly obvious points that they're selling into. So if they accumulated their positions at around the 28 quarter, we can see them potentially exiting. On the NASDAQ, if we continue past the first 5-minute POC, now we're seeing the POC shifting up 38 quarter. We've got some problems. Maybe these longs down here are starting to take profit. Nice little dip back here. For the bulls, if they are trying to take back over, then we should see something in terms of volume to help them out, which is very far from the case at the moment. Nice little pullback. Starting to dip back a little bit further. If we're looking at this to sort of categorize what's going on, the first pullback was an L3 of confusion. We broke up, hit another L3, and after that breakout, it was an L1. So they're trying to get some conviction here, and the fact that we're dipping back to the L2 is something of interest. Haven't really proven anything yet, though. Looking over on crude oil as well, because we're starting to encroach into that zone of interest up here. whole drive up. Freaking crazy. Let's go from the top all the way to the end. POC still. What about the beginning of the day? POC still back there. Okay. A bit more continuation to the downside. Buyers not really showing up to the party yet. Although we are seeing some pokes in volume down here. Starting to creep its way up. POC shifting on the S&P now, 43.32, potentially signifying that the bulls have fully exited their longs. Or at least exited the majority of their longs, thinking like taking 80% off, something like that. And if we look at that from the average up, I mean, that's right at the 2-to-1. So it makes sense. Sellers still continuing to the downside on the NASDAQ. From the bigger perspective, looking out here, like way out here, we've got that 5-wave impulse to the upside with a nice corrective phase down. It makes a lot more sense to be long. I think options are buying into this. I think this fits the bill for what we were talking about before. Remember when we have that really nice, clean, decisive wave 2 and wave 4 is usually a mess, and how this one was kind of sort of fit, kind of sort of didn't? This could be that big, disgusting wave 4. Just, you know, throwing it out there. This is a big enough move for that to make sense. I think longs are heavily favored this morning. But they got to show up to the party and take their take their seat, you know? Doesn't matter if they're favored if they don't show up to the party. More continuation to the upside. Likely next zone of interest would be re-challenging this 14,738 quarter. We do know that they are trying to pull back after having a double L3. Now trying to get the L2. Maybe. They got the L1 pullback, which was over here. We're sort of waiting to see more structure. From the downside perspective in the micro tenths, we've got a first leg down, second drive down. Could be waiting for a third final. This down move might not necessarily be done, but that double bottom might just be good enough that they formed down there at 44. Or I'm sorry, 14, rather. Bulls trying to get more continuation to the upside. Got the L2 up. Ooh, S&P snapping below the previous bull bar and jerking all the way back up again. Whoa. Okay. We got ourselves some bullishness. They close a candle out like that. They only have 20 seconds left. Looking on the NASDAQ, the POC has shifted to the downside. So if the sellers were trying to hold the market down, they may have jumped ship and gotten out. 719 quarter could be their basis for longs for the rest of the morning. Very, very strong emphasis on options here. I like this for a longer term long. Options fit the bill really, really nicely here. I would like maybe a bit more of a dip, but longs are going to be looking for a continuation up. Back to the POC. We can see it jiggle around a little bit. That's fine. If those were longs from earlier, they've been given a chance to re-exit, you know? Market's starting to pull back to settlement, just kind of hovering. Technically speaking, if this were to be wave 1, it still qualifies. They never invalidated it. Sheesh. If you're not familiar with what I'm talking about, as a side note, while we're waiting for the NASDAQ, in Elliott wave theory, one of the very few rules that they have is wave 4 cannot breach wave 1 or 2, the high that's formed right there. If that happens, it's invalid. Like, you have to start over. Doesn't fit. L2 bulls may be showing up to the party here again. POC is still up at the top. Okay. that S&P though, jeez. Yeah, I know. It took me long enough, huh? I just had to really sit down and understand it. That's my thing with everything though, you know. I'm sure you can relate. I've got to know why. And if I don't understand it, it's just, it's garbage. Like, whatever. Secondary test of the L2. Buyers may definitively be coming in here. The volume is gross inside of this. It's nasty, nasty. Oh, yeah, definitely. And I think what really, for me at least, kind of solidified my place in that mentality, POC shifting down, is how well it lines up with the other market cycles that we talk about. The L1s, L2s, I mean, it's absurd. when they get to lining up, they are crazy. Buyers potentially starting to pick up underneath the bull bar. Pay very close attention to how things are jumping around here. We just had the POC shift. If the sellers were short and they're seeing a POC shift down, that would imply that they're potentially exiting. If they're exiting, the market's still under the POC. We don't have any proof of that yet. It should go up. Uh-oh. Wait a minute. POC going down again. Hang on. We need a bit more proof here. Attempted to close underneath it. Sellers trying to get this drive back to the downside. We know the L2 is propping the market up, but it's a challenging L2 given the previous two back-to-back L3s. Toughie. We also have the POC shifting up on the S&P, which is going to cause some difficulty. On the NASDAQ, the market's starting to drift under the POC. That might go bear engulfing at this rate. The bulls needed to get above this 725, but they couldn't get the job done. It looked like they were trying to. We're back to the L2. Buyers might just be buying the dip. It's a low probability, high reward type setup buying down here. You're buying down here with really, really shallow stops. Big reward versus risk. The probability's bad. Nice big jerk to the upside. Beautiful rally up. I'm going to look for this pullback to grab a continuation move. They're going to force me to pick a little more up at the POC. They weren't able to close. Well, they immediately jumped back above the POC, which is fantastic. Now we got to see them push through settlement, which is the next kind of gross-ish area. A re-up at that L2, though, and the bounce off of that is incredible. I don't like that dive back underneath the POC, though. We've got to be quick if we know that we're on a potentially wrong side of things, so we'll give it a second. I've only got the one, but couldn't get a fill on the exit. That's fine. We exited one of them at least. If it wants to continue back down the lower area, they still haven't breached underneath that 14. If the market does want to jerk back above this, we'll likely see a bit more continuation. But right now, I'm more so looking to see how they respond. I already lightened the risk. Can they stick the landing on that? I love that. I'll re-up on that. That's fine. Really, really nice bullish conviction to the upside to try to kick this thing back higher. The POC's back at 725. A little bit of a snapback to the POC again. Buyers reloading on the dip, looking for a continuation pulse back up. Now, playing devil's advocate on both sides of things, that pulse up might have been buyers exiting on break-evens or a little bit more. But I think given the context that happened down here and how vindictively trappy that was, I think bulls are just trying to make it look like the sellers have something going right now. Nice continuation pulse back up to the highs. See if they can stick the landing this time around. Very nice. Very nice. Let's see if they can keep it going. Nice drive. I didn't give up on it. Let's see if they reward me for not giving up on it. Looking for the next pulse above the 740s to 45s, preferably. Break on through to the other side. Really strong bull bar. Keep going. Keep going. Into the 40s. Keep going. Nice pulse. Now pushing above the 40s. Beautiful drive. Fantastic. Right on up. Had to mess around with it a little bit, but that POC was a vindictive SOB on that pullback. There might still be more juice in it. I lightened the load a little bit because of how vindictive it was. In hindsight, that might have been a mistake, but I don't think I would have taken that back if you gave me a repeat button. Nice continuation up in the end. Great, great jump. They did get the L2 continuation. Took them forever to shift the POC to the downside and get back above settlement, but they still haven't made a new high. What a mess. Nice little pullback after the attempted continuation up. A lot of times this next pullback that happens will pull to an L1. We had the L2 supported and we haven't broken a new high. They'll typically look for an inside pullback to an L1 to demonstrate a re-up before the break above the top. Oh, geez. Nice quick little flush. There's the... I don't get filled. There we go. Quick little pullback to the L1 for buyers to reload into this drive. I'm going to exit the first one at around break even, which is what I try to do immediately upon entering because I got a just terrible fill. Bulls got to stick the landing here. They're getting a nice drive. Good continuation up. Keep going. Very nice. Very nice. Get me filled. Come on, you stupid thing. There we go. I gave up a few ticks on the end there, but that started turning into a scalper's objective pretty quickly when they were failing around that bull move. Now that we got that really strong pulse up, good continuation higher, but... I like the L1 re-up, but typically in what I was looking for, just so we're on the same page and why I was kind of shaky on holding on any longer when they were showing resistance again. When you have the L1 re-up, when the market is continuing to the upside and you've got an L2 as an example, which is what we had here, and the L2 is holding, and then you have another continuation back up that doesn't break the high, there's usually a quick little snap back to the L1. They'll grab that L1 and then they'll rifle right up through the top. They weren't doing that. Like, it had the quick pop, and in hindsight, it'll look really nice, and maybe I should have been a bit more patient, but the way that it was moving was like it was hitting a brick wall inside that previous inside swing. See if they can continue back to the upside. Bears maybe trying to sell underneath this bear bar. Realistically, if we're looking at it from a volume perspective, we still know that 725 is the dominant by quite a bit. As far as upside continuation goes, from the original pulse, we've got 60s, 50, 59s, 60s as far as upside objectives. Nice bull bar back up. Really awkward, though, kind of forcing traders to buy a bit high. This string of bull bars on the S&P, holy crap. There's a lot of orders coming in up here. 725 still massively dominant volume. If we go back a little bit from the top to the bottom, it's still the dominant volume. Bulls are able to break above the highs, and we surpass that top, which now confirms the previous zone of interest at 725, as if that was a surprise. Hey, Ace, how's it going? Welcome, welcome. More continuation back up, kind of jerking around inside there. A little micro wedge. So they did end up holding the L1 in the end. Where's my drawing? I think I can. Should be here. Yep. Okay. How is it there? Let's keep the POC going on the S&P, and we'll also keep it going on the NASDAQ. The longs, again, we know that they finally, after a bit of a mess, re-upped at the 725s and are continuing further up. It's a very middle-weighted POC, so my initial inclination is to believe that they would be scalpers. Those scalpers have already taken their objectives, though. So next targets, then, would be the 2-to-1s, meaning that the bulls are looking for longs up to the positive half DP. That'd put resistance around 792, 793. At least resistance in terms of upside targets for buyers. From the swing, if you were looking at it from the options perspective, like we've been talking about for a while now, this is a really nice pulse to the upside. This came a bit quicker than I was initially looking for, but look where we are now on the larger perspective. We're breaking above the POC. We've already closed above it, which is incredibly powerful, especially on a 15-minute perspective, noting that the sellers had 2 strong drives, maybe even 3, with a trap at the bottom. I mean, holy crap, you know, the only thing we're missing is this to complete the V bottom and break above the highs. And then this very quickly becomes nothing more than a flag or a pennant, and guess where the next leg up is. As far as volume is concerned, we can kind of see where the next leg up will likely be. Where do you think? Where do you think the market's trying to go to? What do you know? What do you know about that? What do you think? You think we're gunning for a little bit of an objective? 15,000's right around the corner. Big time. And that's the double up based on the POC. I don't believe in coincidences. Again, following the wave principle, we've got wave 1 into 2. Wave 2 was incredibly decisive, very quick, before it broke back up to a new high. Now, you could consider all of this part of it, but when it closed back down here, it invalidated this larger swing. So it has to be this swing, which was valid. Therefore, wave 1 was very quick and decisive. Wave 4 is usually a train wreck. Sorry, wave 2 was quick and decisive. Wave 4 is usually a mess. This was. I mean, look how long this took. So the fact that we finally made it back up to the highs and it's at 0.72 and the objective's usually 6.8, I mean, you tell me, you know, this feels like we might be sooner at the top than later. They've got some issues. If the bulls want to keep this train going to the upside, we need to hold a corrective phase that maintains, you know, around the 15s and doesn't break down, preferably even settlement. All right, it's got to go sideways more than down as far as the pullback is concerned. Market pulling back down, big old bottom weighted POC. But again, looking at the structure that we've got going on, this is potentially the fifth wave. I've got a really difficult time wanting to buy into this. I know the POC is at the bottom, but I mean, awfully convenient, you know? It's just, if it works, it's going to work without me. That's going to be the mentality that I'm approaching that one with. It's too late in the game to be putting that much risk on. So effectively, for me at least, when I'm looking at this, I know that the original risk would be from here. But realistically, if I like the long good enough, my risk effectively would be down to the lows. And it's not worth it. Looking at it from a continuation stance, we know that we had the L3 into another L3, finally got the L1. After that, we've got an L2. Broke another new high, now we're back to L1. There's not really any consistency in this movement right now. We're just kind of jumbled up right now. Still feels like we're maybe inside a corrective phase. When there's a pullback after wave 5, there should be an ABCD. Let me find my words. Would you please label when that happens? Yeah, so the ABCD correction phase, if you look at it from the, and again, this is a guideline, this isn't a rule, but when you're looking at the corrective pullback, after you've made wave 5, or even inside wave 3, any of these, really, they should all be able to be subdivided down into a smaller way, and you might have to go to a faster time frame, but you're typically looking for the same patterning to the downside within that. Now, the ABCD might look something like this for the completion, but either way, you're looking for that structure within there. If we are looking at it from an ABCD perspective, one very obvious one that stands out would be, and since I know I have a million things drawn on my chart right now, it looks like an absolute train wreck. Jeez. It would be from up here to here, from here to here. That's what I'm going to be measuring, just so that we're clear, because I know it's going to be difficult to see. That would be the ABCD corrective phase. In the end, it just took a 5-wave completion to get there. And if you look, the 1-to-1 move, a picture-perfect ABCD would have been there. It missed it by, I don't know, 2 points. So, good enough. You know, when we start rotating back above, that's why we were transitioning to longs here. There's a lot of reasons to believe that there's just some major objectives that are done. Not to mention the fact that if this is a corrective phase, again, ABCDs should be able to be subdivided. This is also a 5-wave corrective pulse. 1, 2, 3, 4, 5. It's an expanding, but that's fine. It's the completion of 5 waves in the exact same location where the ABCD is completing a 1-to-1 move. Again, I don't believe in coincidences. That's too perfect. So that's why I've had a long bias all morning. Even while the market was underneath the moving average initially. It's more obvious after the fact, but... All right, we are a little bit after 10 o'clock. So feel free to get those last questions in, and then we'll swap over to the extended session. The extended sessions, we've been nailing out a lot of scalps going on here. POC buyers trying to flip the script here in the short term to get another continuation back to the upside. I still really have a hard time believing this move up. Like I said, it'll happen without me, so I'm fine using this time to transition. That works perfectly. Crude oil inventory is right around the corner. We'll hit that and as the next thing. So give everyone a couple seconds here, then we'll flip-flop over. Speaking of which, where are you at, Crude? 4.5 now? Ooh, okay, volume's starting to step up a little bit. The market did not spend a lot of time there to be creeping up that much volume, too. You can, I mean, look at that, just context that, right? Look how much time the market spent there comparative to how much volume it traded. And then look at the POC and how long it spent there. Like, really compare that. That's an incredible difference. The POC ended up here. The market spent like a fraction of a couple candles here, and it closed there and there. I mean, that's only a third of the difference. That's crazy. A lot of volume stacking up, and you can start seeing it accumulation phasing. That third one is kind of waiting. They might run out of time. Again, this is why I didn't believe that leg to the upside. They can make it look as nice as they want to, but when you know it's a 5-wave completion, it doesn't make any sense to buy it. Let everyone else buy it. If they go without me, whatever. ABCD correction. Maybe buyers buy in the dip here, but it would make more sense to see it pull back to the 25s to 30s as far as value is concerned. That'll do it. I'm not seeing any questions coming in, so let's transition over to the extended session for members and VIPs. For those of you who are ducking out, I hope you had a fantastic morning. It's been a really, really nice morning. Got a little bit chopped up inside that wave 4 pulse around settlement. Not a surprise. We expected it to be gross, but maybe I should have given it a little more wiggle room. Either way, made it work. Nice move. Nice morning so far. If you have any questions I may have missed or that are a little bit longer, feel free to shoot them via email, jhb@ssftg, or drop them in the comments below. Either way, we'll get them taken care of. Like I said, I hope you have a fantastic day. I hope you have had a fantastic day. And until the next one, we'll see y'all then. For the rest of you, hang tight, and we'll transition over. We'll talk to y'all later. Thanks.